Welcome to Zillow's fourth Housing Forum. I'm Zillow CEO Spencer Raskoff. Today, we're thrilled to have the Bipartisan Policy Center as our partner as we begin to explore what's next for our recovering housing market. It's been quite a wild ride. When Zillow started in 2006, the market was near its peak, and just a year later, home values were falling in earnest. It's not our fault. There's no correlation between those two statements. They would decline 25% over the next 4 years, and the housing recession, of course, would eclipse that of the Great Depression. But thankfully, things have changed. Home values are up about 10% from the bottom, and some markets are actually retesting the highs that we saw at the bubble, which may sound a little bit frightening, but our latest real estate data shows that values are starting to temper in parts of the country, indicating stabilization in home values. Now that we're in a good place and that the recovery is more organic and sustainable, we believe it's time to take a hard look at some of the practices that got us into the housing recession in the first place. Today, we'll hear about financial literacy, and we'll focus specifically on making mortgages easier for consumers to understand. We're also excited today to spend time addressing the topic of GSE reform. When I sat down with President Obama in August for him to answer consumer questions about the housing market, a big topic of discussion was the reform of the GSEs. And while GSE reform has been on the minds of many policymakers and thought leaders for some time, that added some momentum to this conversation. We're happy today to move that conversation to what we hope is the next level and to try to do something new, which is to bring in the voice of the everyday consumer into this important conversation. Today, we'll hear from some of the architects of ideas to reform Fannie and Freddie, and you'll hear some questions from prospective homeowners about how the respective GSE reform plans will affect them. We're honored to have an esteemed group of speakers today, including FHFA Acting Director Ed DeMarco, FHA Commissioner Carol Galante, Representative Randy Nagebauer from Texas, and Senator Mark Warner from Virginia. On behalf of myself, Zillow's Chief Economist Stan Humphreys, and the teams from Zillow and the Bipartisan Policy Center, thank you very much for being here. Please remember to join the conversation, if you're so inclined, on Twitter using the hashtag HousingFuture. We'll also be looking to Twitter during the Q&A portions of the program, a great opportunity for both those here in the room and for those watching on the web to ask questions via social media. I'm now happy to introduce Erin Lantz. Erin runs Zillow Mortgage Marketplace and is deeply knowledgeable about the mortgage market. She came to Zillow after a decade in the mortgage industry, where she ran Bank of America's consumer direct purchase business, and has been instrumental in building what is probably the most consumer-friendly mortgage shopping experience out there. Erin will be joined on stage by Gail Hillebrand of the CFPB, and I'll let Erin introduce Gail. Erin and Gail, please come to the stage.
Thanks, Spencer. So over the past several years, various efforts have been made to make the mortgage process more transparent and more understandable to consumers, with varying degrees of success. And still, consumers find the home application process, the home loan application process, selecting the right mortgage product, and probably most importantly, understanding what they're signing, to be some of the most stressful experiences many Americans have to encounter through the mortgage process and the home buying process. That's why I am pleased to be joined by Gail Hillebrand, the Director of Consumer Education and Engagement at the CFPB. She's here to talk to us today about what the CFPB is doing to further demystify the mortgage process and talk about what consumers can expect in the months and the years to come. Thanks, Gail.
Thank you.
Want to tell us a little bit about your role at the CFPB and what the CFPB is focusing on?
Great, thank you. Many of you in the room know, and not everyone perhaps on the webcast knows, the CFPB is the financial regulatory agency that was created out of the financial crisis to make sure that markets work better for consumers, that markets work better for responsible businesses, and that the financial services and products markets work better for the economy as a whole. And we're doing that with effective regulation, with even-handed oversight over banks and non-banks for the consumer laws, and with empowering consumers to take more control over their financial lives. And that last part is mostly done in our Division of Consumer Education and Engagement.
Well, let's start off with what's on everyone's mind, the future. Tell us about what biggest changes consumers can expect in the mortgage process in the coming years.
So the new mortgage rules that go into effect in January will make the market safer at every step for consumers, and will also provide some new information for consumers to use in the shopping decision. On the making the market safer side, every lender will be obligated to make a good faith determination of whether that consumer can afford to repay the loan before they make it. Most lenders are doing that now, but they weren't doing it in the crisis, and this will make sure we don't get back into that situation again. Now, for consumers, it's a two-part process. The lender decides what they think you can afford to repay. You still have to decide if that number is the right number for your own family budget and your own financial priorities. So that's the first piece. It will be safer because lenders will have to underwrite loans.
So those are great guidelines, both on the lender side as well as the consumer side. On the consumer piece, the Know Before You Owe campaign is what many of us understand to be the CFPB's effort to educate consumers and explore ways to streamline the documentation and paperwork involved with getting a mortgage. Can you talk a little bit more about the background behind Know Before You Owe and what it means for consumers?
So Know Before You Owe is a signature initiative of the Consumer Bureau. In the mortgage area, Congress told us to take two forms and combine them. And instead of just doing that ourselves, we decided to really take this opportunity to talk to the industry and the public about how those forms could really be a shopping tool. We did focus groups in many cities. We sat down with real consumers and got them to tell us which part of the form made sense to them, which part their eyes were drawn to. Then we put it up on our website as part of Know Before You Owe, and 27,000 people from industry and consumers told us what they thought of these forms. We changed them based on the impact and inputted feedback. And then we were able to do web analytics that tell us things like which part of the form did people really look at, how long did they spend there, which part was really communicating. The result of that will be a new form, it's still in proposed stage, which will give you information on the very first page. What's my interest rate? How much am I borrowing? What's my payment? And can any of those things change? And that is fundamentally important shopping information for consumers.
Those sound like really important changes that consumers will be excited to embrace when they come out. But like everything that's new, it can't be inexpensive to implement. So can you talk to us about the cost associated both for the consumers and the industry?
There is a cost for industry in changing forms. We recognize that. We're doing a lot of work with the small provider guides and in other ways answering questions from industry to help them get ready for all of the new requirements for the mortgage rules. But if we think about costs, we also have to think about benefits. Consumers who shop for a mortgage can save thousands of dollars. And if these forms make it easier for consumers to shop, and if it makes it less likely that there will be a foreclosure in your home, in your neighborhood, in the larger area that affects the price of your house, that's going to be good for all of us.
Let's shift gears a little bit. So at Zillow, we're all about consumer education and focusing on empowering consumers with data about housing and housing finance. But one of the things we struggle with, especially when we're talking about mortgages, is that housing finance and mortgages is very overwhelming. It's very complex for consumers. We've done studies that tell us that consumers spend more time researching a vacation than they do researching their mortgage. And they'll do that despite the fact that they'll tell you that they're not prepared. A recent survey that we did showed that a third of all consumers are not prepared to take out a mortgage based on their very basic level of mortgage understanding. So what advice do you have for us and for the CFPB around how to get consumers excited and to educate themselves around something as daunting and complicated as mortgages?
So we all want to save money. Some of us drive an extra mile to save 5 cents on a tank of gas. When we shop for a house, we spend a lot of time on that. Starting earlier in the mortgage shopping process will help. If you start thinking about shopping for a mortgage when you start looking for a house, you give yourself more time and more emotional space to get that work done. We all need to talk about the value of getting 3 quotes, or however many you feel comfortable with, and really comparing those to make sure you're getting the best deal for yourself and your family.
So what are some of the resources that the CFPB is offering to help ease that shopping process for consumers?
So there will be more resources coming up over time, but right now we have a couple things for consumers. We have Ask CFPB, that's at consumerfinance.gov/askcfpb. That's a database of 1,000 questions and answers about all types of products, including mortgages. You can ask kind of simple questions that just maybe might be hard to find the answer to. You might want to know, the most popular question we have is, where can I get my credit score? Or you might want to know something very detailed. What does this term mean that someone is using in the mortgage process? And you can get those trusted answers from us. They're short, If we don't have the question that you would like answered, you can propose a new question. And if you think our answer is too complicated, you can tell us that too.
So we receive a lot of questions on Zillow, and through our ratings and reviews platform, we receive complaints and compliments about the lenders that participate. Can you talk a little bit about the CFPB's complaints? What are the common topics and themes that are coming up?
The most common complaint we get in mortgages is about servicing. And these are not new problems. I can't get someone on the phone. The person I talked to doesn't know what I told them last time. I can't find out whether I have any choices to save my house. The new servicing rule that goes into effect in January will require some customer service standards so that that is far less likely to happen. And if you are not in trouble, you're just paying on time, you'll get a statement from your servicer every month telling you how you're doing, and you will have the opportunity and the ability to report an error and expect either to get the error fixed or to have the servicer tell you why they think they're right and you're wrong.
Okay. So talking about servicing now, most of what we've been discussing has been about prospective home buyers, what they should do when they're thinking about getting a mortgage. Can you tell us a little bit about what current homeowners should be thinking, how they should use the CFPB's resources?
So if you're having a problem now with a mortgage, you can complain to the CFPB at 855-411-CFPB. If you are in trouble with your mortgage, you need to do two things as soon as possible. One is contact your servicer, talk to them early as soon as you know you're going to have trouble missing a payment, or wherever you are in that cycle, the sooner you talk to your servicer, the better you're going to do. The other is go to the HUD website, hud.gov, and find a referral to a HUD-certified housing counselor. These folks understand the programs and the choices for you.
Great. And what about for mortgage shoppers who have some suspicion, or they feel like things are not maybe going right? What are some red flags they should be looking for, and where should they go if they have those sorts of concerns?
So I'll tell you about the red flags, and then maybe we'll talk about shopping tips.
Great.
A big red flag is that what the salesperson tells you is not what the paperwork says. And that is across the board for consumers in mortgage and non-mortgage. If the salesperson tells you one thing and you can't find those promises in the paperwork, you probably want to walk away and find someone else to work with. You can complain to the CFPB. We talked about that, 855-411-CFPB. You can also listen to that little voice that says, something seems funny here. But there's another problem consumers had experienced in mortgage shopping, and that is comparing apples and oranges. If you look just at the monthly payment, you may not be getting a full picture of what that mortgage really is and what it will cost you. So some payments are the same over the whole life of the loan. Some go up and down. And the new disclosure form will actually tell you how high can it go. It's very important to know not just what's the payment in the first year, but how high can it go if you're looking at an adjustable rate mortgage.
Now, those are great tips for consumers. Just to close us out, why don't you walk us through, what are the top 3 tips that you have for consumers who are thinking about shopping for a mortgage?
So the top 3 tips from the Consumer Bureau for consumers thinking about shopping for a mortgage are actually shop. Don't just take the first offer you get. Start as early as you can, preferably starting when you're starting the home buying or the home looking process, so you have enough time to learn this area and ask a lot of questions. Get an actual quote at the application stage from more than one lender, so you have a chance to really take a look at what's on offer to you. And remember, whatever a lender is willing to loan to you, you still have to sit down with your own family budget and say, is this the right amount for me? Is this going to work for my family over time?
Great. Thank you for joining us today.
Thank you.